Hey everyone, after nearly 20 years of its last IPO, Reliance Industry has come up with a new listing of Jio Financial Service on 21st August, where the existing investor of Reliance Industry received Jio Financial shares in the ratio of 1:1. Company got listed at a market cap of around 1.65 lakh crore and it already created a lot of buzz in the street with its announcement of entry into lending sector, AMC sector and insurance sector. Now, Reliance has been known for disrupting the sector it enters into, be it telecom sector in the past or retail sector. So there was a lot of curiosity to understand more about the business model of Jio Financials and the growth potential for the company. The question here is, can Jio Financials really disrupt the financial sector of India? Moreover, if you have noticed, after the listing, Jio Financials continuously hit the lower circuit for 4 days before the lower circuit rally got stopped on Friday. With this correction, Jio Financial market cap has fallen from 1.65 lakh crore to currently at around 1.35 lakh crore. So in this video, I've also tried to explain the reason for the correction in share price. But before we begin, just a disclaimer that this is not a buy or sell call. This video is only to educate you regarding the business potential of the company. Kindly do your own research before investing your money. Alright, let's get started. Folks, please note that Jio Financials has not yet published any document regarding their business and growth plan. So I have tried to collate information from various secondary sources. Alright, so basically Jio Financial is initially targeting 5 key business segments. First is retail lending, second is asset management sector where it has partnered with BlackRock with around 50% joint venture, third is insurance broking, fourth is digital payment and the fifth business Jio is eyeing is the insurance segment. Now within lending, company has identified 3 key areas: consumer durable lending, merchant lending that include your personal loan, secured and unsecured loan to merchants, and third is MSME lending, which basically include your small ticket business loan to small vendors. Going forward, Jio Financial will leverage its distribution network of retail stores to offer financing on, let's say, consumer durables that include your mobile, TV, laptop, then home appliances and so on. Now, I was going through some of the research and found that Indian digital lending market is valued at $270 billion by 2022. And this segment is growing at a very fast rate due to rising aspiration of young Indians and their willingness to buy things on EMI. And I'm sure this is something you all would have observed. Now, please note that there is still immense growth potential within the rural segment where people still don't have access to consumer lending. So as mentioned before, Jio Financials will leverage its retail chain of nearly 18,000 plus retail stores and more than 7,000 plus towns where it has its distribution. Then it can expand its lending universe by adding personal loan, which is currently at around 40 lakh crore rupees of market. Then next segment in lending is your merchant lending, where Reliance already has a merchant network of 30 lakh partners across its online and offline format, and it is planning to expand this merchant network to 1 crore partner in the next few years. Just take a moment to digest this fact. 30 lakh plus merchant partners today and growing. And these merchants need access to credit facility to grow their business. So there's a crazy growth potential in this segment. And then third segment is MSME lending to small vendors across the country. And I strongly feel that for India to become a $5 trillion, $10 trillion economy, the growth of small vendors in MSME sector will play a crucial role. So overall, the lending universe has got a huge growth potential. Now, when it comes to AMC sector, I've said multiple times in the past that it is still day one for mutual fund industry in India. India's AUM to GDP ratio is around 16%, whereas the global average is around 75%. And with immense growth potential in Indian economy, coupled with increasing awareness about mutual fund investment, we have already seen SIP books growing to nearly 15,000 crore on monthly basis. And this is a big structural change in India. Likewise, the insurance sector has humongous growth potential. In short, the entire financial spectrum Jio Financial is eyeing has exponential growth prospect. Company has already roped in the best folks in the industry with Mr. KV Kamath as independent director and non-executive chairman. In case you are not aware, KV Kamath is one of the most respected name in Indian financial sector. And IIM Ahmedabad postgraduate, KV Kamath is the man behind building ICICI Bank and making it the second largest private bank in India after HDFC Bank. Jio Financial has also roped in Hitesh Kumar Sethia as president and CEO of the company. He again has over 2 decades of experience, mainly in ICICI Bank, where he headed multiple positions. In short, Jio Financial has built a very strong team of board of director and key leadership position, and that is the holy grail of a financial company. Now that we have decent understanding of Jio Financial business plan and the growth prospect, let's try to figure out whether Jio Financial can really disrupt the financial sector of India or not. Okay, before we look at Jio Financial, let's try to understand what factors resulted in Jio disrupting the telecom sector of India. See, the biggest factor has been availability of low-cost internet. Before Jio, data plans were quite expensive. For instance, when Jio launched the data plan, Airtel used to offer 1 GB of data per day at around 399 rupee per month, and Jio launched it at 199 rupee a month. That's less than half of what competitor was charging. And we all know that India is a price-sensitive country where people switch products and services based on pricing. Of course, there were many other factors, but low pricing was the biggest factor for Jio disrupting the telecom sector. The big question here is, can Jio Financial do something similar in financial domain? The answer is not really. Try to understand this. In lending sector, NBFCs borrow money from the market and lend that money at higher interest rate to the consumer. For instance, if the company has borrowed money at say 7% interest, it can lend it at let's say 10 to 12% rate, and that's how it will make money, which is the difference in the interest rate, or in other words, the net interest margin or the spread. Now the catch here is that if the competitors are lending money at say 10-12% interest rate, Jio Financial can't lend it at half the rate of say 5 to 6% because Jio can't borrow money at half the rate of its competitor. Yes, I understand that since it has a strong parentage of Reliance Industry, it can fetch top credit rating of AAA, which means the cost of borrowing would be the lowest for Jio Financial in the NBFC sector. But that does not mean Reliance can borrow money at half the rate of its competitor. Hence, I don't see a price disruption in financial sector from Jio Financial. Yes, it can certainly offer loan at lower rates than its competitor, but the rates won't be crazy low. At the same time, what I expect is that if Jio Financial offer loan at lower rate and try to capture the retail lending market, competitors would also be forced to reduce their loan rate, and that can impact the profitability of the competitors. Here when I say competitor, I'm mainly talking about Bajaj Finance, which is an undisputed leader in the consumer lending in India. Although this competition would be eventually beneficial for Indian consumer. Now apart from this, I'm sure Jio Financial will leverage its huge distribution network of Reliance Retail and Jio and would come up with very interesting collaboration. So I won't be surprised if tomorrow Jio Financial get into an exclusive tie-up with Apple to offer iPhone on EMI at lowest interest rate. In short, I don't see Jio Financial disrupting the financial sector of India, as it is already a matured industry and you can't really offer loan below a particular interest rate. Moreover, it is not just about interest rates. Lending sector is quite complicated, where you have to look at various regulations, then build a very strong lending network, ensure a strong credit underwriting process, and so on and so forth. Then if you look at AMC sector, while the potential is really immense in Indian mutual fund industry, it is already a very cluttered market with more than 50 AMCs competing for a pie in Indian mutual fund industry. Moreover, the future of AMCs is mainly low-cost index funds, and there are already AMCs offering index fund at very low expense ratio in the range of 0.07 to 0.2%. So again, Jio Financials can't really disrupt the pricing part here. Overall, the key differentiator for Jio Financial's growth would be how it leverages its distribution network of Reliance Retail and Jio, and how quickly it expands its financial services to every part of the country. Another very strong factor of Jio Financial growth would be the digital ecosystem of Jio that it can leverage to expand its reach at much faster rate. At the same time, it has to ensure profitability with top-notch asset quality. You can't compromise on asset quality in financial sector just to support growth. I hope you got a good sense of its business. Now let us understand the reason behind the daily circuit in Jio Financial share price. Folks, there is certainly no doubt that Jio Financial has a huge growth potential, and it enjoys a very strong promoter pedigree of Reliance that has been one of the biggest wealth creator for the investor. So with that logic, Jio Financial should have seen huge buying from investor after its listing, isn't it? But what happened is just opposite. Right after its listing, Jio Financial has not just corrected, it continuously hit lower circuit for next 4 days before the lower circuit stopped on Friday. The reason for consistent fall in Jio Financial share price is forced selling from index funds. Let me explain it. Listen carefully. See, before Jio Financial got demerged, Reliance had a weightage of around 11% in Nifty 50. And there are Nifty 50 index funds in India with an AUM of around 2.7 lakh crore. Out of this, SBI Nifty 50 ETF itself has an AUM of 1.64 lakh crore. So we are talking about total AUM of 2.7 lakh crore. Now the rule says that index funds have to hold stock in the same percentage as per the weightage of the stock in the index. It means around 11% AUM of index fund was in Reliance. That's roughly around 29,700 crore rupees. Now Reliance allotted Jio Financial in the ratio of 1:1, where Jio Financials got a weightage of around 10%. It means index funds that were holding nearly 29,700 crore worth of Reliance shares automatically received Jio Financial shares. Since the weightage of Jio Financial was roughly around 10% of Reliance, around 2,970 crore got distributed in Jio Financial. Now here comes the catch. Since Reliance was part of Nifty 50, Jio Financial also became a part of Nifty 50 after demerger by default. But as per rule, the listed entity can't remain in the index. So Jio Financial does not qualify to be a part of Nifty 50 index, mainly because there is not enough history of the company, and hence Jio Financials has to be removed from Nifty 50 index. It means all Nifty 50 index funds have to sell Jio Financials because Nifty 50 index fund can only invest in 50 stocks of Nifty. So if a stock is getting out of Nifty 50, index funds replicating the index have to sell the stock. And that's what exactly happening. Index funds are selling Jio Financials as it is not going to be a part of Nifty 50 index. Since Jio Financials got listed at around 262 rupee, if you divide 2,970 crore by the share price, that's roughly around 11.5 crore shares that needs to be sold forcefully by index fund just to follow the rules. So until we see this selling, there will be pricing pressure on Jio Financial share price. I hope you got the reason for continuous lower circuit in Jio Financial. The only thing I fail to understand is when index funds are selling Jio Financials, then why FIs or active mutual funds haven't shown interest so far in accumulating Jio Financial. The only reason I could find is market is not willing to give a high valuation to the company at this point. So coming on to the valuation part, currently the book value of Jio Financial is around 24,000 crore rupees. And considering the holding company discount, it got listed at a price to book of nearly 5. And just for reference, Bajaj Finance command a price to book of 8. And the leading banks of India like your SDFC and ICICI trade at a price to book of 3. Of course, Bajaj Finance has proved its supremacy in the lending sector, so it would command a premium, but Jio would start from scratch. So the key question here is, what is the right valuation that Jio Financial should command? Well, on that, market is divided into two segments. On one side, you have people who have blind faith on Mr. Mukesh Ambani and the strength of Reliance. On the another side, people want to wait and see how Jio evolve over the period of time and then give it a premium based on its performance. Ideally, that's the right way to do, to wait and see how Jio Financial prove its mettle and then invest systematically. But on the other side, there's a fear that by the time Jio Financial prove its mettle in the coming years, its share price could already jump multifold times. At the same time, you can't completely neglect the risk part of the underperformance as compared to the market expectation. And if that happens, it can also result in valuation derating. So ultimately, it would depend upon what valuation market would like to give to Jio Financial. Company certainly has big plans in financial sector and market would keep a close eye on the growth and accordingly decide the valuation. Personally, I think that after around 20% correction from its listing level, Jio Financial is trading at around 220 rupee and looks decent and worth taking a shot once the share price stabilizes. At the same time, we can't deny the possibility of another 10-20% correction. So the better approach here would be to consider buying Jio Financial systematically over a period of time. Reliance has set up a solid distribution network with its retail stores and a solid digital infrastructure with its Jio platform, and I really wish Jio Financials to grow big because ultimately it would be beneficial for Indian consumer and growth of the economy. So I will keep a close eye on the performance of the company and will keep you posted in case of any key event. Now tell me in the comments, what do you think about Jio Financials? Are you bullish on the company or bearish? And if you find this analysis useful, do share it with your friends. I'll see you next video. Till then, take care.